South China Morning Post, 1st of February 2023, Asia will benefit from China's reopening, but managing growth and inflation will be difficult, FMI economist. The top economist of the International Monetary Fund expressed confidence that the reopening of China as it recovers from the COVID-19 outbreak will have favorable spillover effects on Asian economies. In an interview with This Week in Asia on Tuesday in Singapore, Pierre-Olivier Gourinchas stated that he was fairly sure that activity in China would pick up and that existing indicators, such as an increase in internal travel, suggested a very significant reopening. This reopening will undoubtedly strengthen the global economy, the economist from Washington remarked. Of course, other nations that trade closely with China, including many Asian economies, stand to gain. In its Outlook report released Tuesday, the IMF increased its global growth prediction for this year by 0.2 percentage points to 2.9%, citing China's full reopening and robust American spending. In 2023, it predicted that China's GDP would expand by 5.2%. According to that forecast, Asia's rising markets, which include China and India, will be significant forces behind global expansion this year, with projections indicating that the economies of the world's two most populous countries will account for 50% of overall growth. According to Gourinchas, 2023 will be when rising Asia becomes one of the significant development drivers. Many advanced economies will have slower growth in the coming year. Balancing growing inflation and growth will be a significant problem for governments across Asia. Gourinchas emphasized that several of the region's economies, including South Korea, have experienced rising prices despite central banks' steadfast commitment to tightening monetary policy. However, he added that it hasn't yet succeeded in driving inflation back down to a level that would be comfortable for central banks. This tightening of monetary policy is starting to have some impacts, he said. Consumer prices in South Korea increased by 5.1% in 2022 compared to the previous year. The headline inflation rate in Singapore last year was 6.1% on average. Gourinchas suggested there were risks of countries not doing enough while acknowledging there was certainly a risk for central banks to overreact and harm growth. He advised them to keep maintaining the monetary policy in a sort of contractionary mode up until the point at which inflation is on a declining path. The IMF's chief economist highlighted that although recent worries about a surge in energy costs due to China's reopening were relatively muted, opening up the world's second-largest economy may put some upward pressure on prices and increase demand for liquefied natural gas. According to the IMF, global growth would slightly decrease from 3.4% in 2018 to 2.9% in 2023, and because of the general slowdown, the pressures would not be as significant. Through 2023, he predicted, futures for energy and other commodities would probably drop. Gourinchas characterized the ongoing headcount reductions at tech companies across the globe, especially in some Asian markets, as not particularly alarming. Tech businesses increased hiring during the pandemic, and some have found it unsustainable, which is one reason for the recent layoffs. Although these layoffs have garnered media attention, he noted that the business is still expanding, and the US and European labor markets are still competitive. We would have to be concerned about maybe the economy tipping into a recession if somehow there is a wave of layoffs and the number of workers who lose their employment begins increasing, Gourinchas remarked.